Did you know that the more you invest, the less you pay the IRS? Yes, you heard me. There are ways where you can invest your money, AKA make more money, while simultaneously paying less taxes at the same time. Now, these strategies were usually reserved for the rich, but today I'm going to be peeling back the curtain and giving you these exact strategies that you can use today. So if you're ready to learn how to grow your investments, retire faster, and even save for your children's education, all while minimizing your tax liability, then you've come to the right place. We're going to be going over all that plus more in today's episode. What's up, family? Welcome back to another episode of Tax-Free Living, where I teach entrepreneurs just like you how to live tax-free. And today we're going to be talking about ways that you can invest and not pay the IRS. You see, when it comes to saving on taxes, there are levels, right? The basic level is, okay, like, how do I spend money and get write-offs? And that's okay. That's a good way to start. But the next level is like, instead of spending my money, how do I invest my money, AKA grow my money, and still find ways to pay less tax? So this is the things we're going to be going over today. And I got 5 different investments that will lower your taxes overnight. So without further ado, let's get to number 1. So if you're a small business owner, in my opinion, you want to listen to, this is my opinion, right? I think having a retirement account is a no-brainer. Whether it's a SEP IRA, which is a self-employed pension, whether it's a solo 401k, or it could be a simple plan, right? Having some type of retirement plan, in my opinion, is a no-brainer, because in 2024, the IRS will let you invest money into these retirement accounts and save on taxes at the same time. And in 2024, guess how much you can put away in your retirement account? You can put away up to $69,000 into your retirement accounts. And guess what? You will get a $69,000 tax deduction for doing so, right? And then if you decide to hire your spouse into the business as well, guess what happens? That number doubles. So now you get, and I don't want to do math on, because I might get the math wrong. Whatever 69,000 times 2 is, that's how much you can put away into your retirement plan in 2024, and you are able to get a write-off in that same amount as $138,000. Why didn't I think I could do that math? $138,000 deduction, which is crazy. Now, here's what you need to know. There's a calculation on that you need to know on how to max out that 69,000, right? That 69,000 is going to be based on a percentage of the income of the business or the salary you pay yourself. So if you want to know the max that you can contribute in your business today, I recommend you talk to your CPA so they can help you out with the calculation. But still, tens of thousands of dollars in deductions for investing in myself, right? And investing in my future. And the crazy part is this. Some people say, well, once I put that money away in my retirement account, and this is me being the public. Once I put that money in my retirement account, bro, it's stuck there till I'm 59 and a half. That's what you think. But depending on what plan you select, you can be able to take loans from your own retirement account and use that money today. Okay? So depending on what plan you select and how you set it up, you can take a loan from that money. So I could put $69,000 in there today, and a month later, I can borrow 50% or $50,000, whichever's less. I can borrow that money and use it in my business. So I still get the tax deduction and I still get access to the money. And guess what? Since loans are not taxable, I'm not even paying taxes on the money that I just borrowed. What's up, family? If it's one thing that I know is true, is that you can survive without community, but you can't thrive without community. And in order to build true community, you have to get in the right room with the right people. And so we wanted to create that room especially for you. This is why we have Wealth Weekend. This is going to be a weekend experience where you're going to get amazing education, amazing experiences, and amazing entertainment all in one weekend, so you can become that first generation millionaire in your family. Because one thing I stand on is generational curses ran in my family until they ran into me. So my question is, are you going to be that curse breaker for your family? And if you want to, you need to join Wealth Weekend. So click the link below and we'll see you there. Now let's get back to the episode. Number 2, health savings accounts. Okay. HSAs. I love HSAs. So what is the HSA? An HSA is a health savings account that allows you to invest your money and use that money in the future for medical expenses if they occur, right? And in order to have a HSA, you need to have a high deductible health insurance plan. Because you're a business owner, you get to choose what type of health insurance plan that you want. So if you want an HSA, simply choose a high deductible health plan so that it can be HSA eligible. Now with HSAs in 2024, you are able to put away $4,150 if you're single or $83,000 if you are married. Now, here's the dope thing about HSA. It has a triple tax benefit. I'm gonna say that again for the people way in the back. It got a triple tax benefit. So you get a tax deduction for the money going in. The money grows tax-free. And then as long as you use the money for medical expenses, you don't even pay taxes on the money when it comes out. There are few strategies that help you save taxes 3 times by leveraging the same account. Right? And what most people don't realize is that HSAs have a lot of flexibility on what they're being used for. HSA eligible expenses is a wider range than you might think. If you want LASIK surgery, LASIK counts as HSA eligible. It's not just hospital bills, it's for elective surgeries. You can use them for, so if you, this is a crazy strategy. If you have a service animal, you need that animal because that animal betters your health, right? So health service animals, so service animals qualify as HSA eligible. So if you have a service animal, you are able to use your HSA to pay for that, for the animal's living expenses. So I say all that to say, I know I'm getting ahead of myself. Y'all can see I'm a little excited today. But you can see that HSAs can be an amazing account which allow you to invest, get a tax deduction for investing the money. The money grows tax-free, and then as long as you use it for eligible expenses, you save. You don't have to pay taxes on that money as well. Number 3 is 529 college savings plan. 529s are plans that allow you or someone else to put money into an account which is invested, and that money is going to be used for your children's future educational expenses. Now, the thing about 529 plans is you don't get a federal tax deduction for contributing the money, but you could get a state tax deduction for contributing the money. So you need to look up your state and see if they have a tax deduction or a credit for the money that you contribute. But here's the sexy thing about 529 plans. I never thought I would be saying the word sexy and 529 plans in the same sentence, but it's the world we live in, because in 2024, they released a new rule which goes as follows. So before the rule was instated, if you didn't use that money, if you didn't use that 529 plan money for your child, it had to be used for college, or you would be taxed on that money and penalized on that money. But in 2024, they say if your child decides they don't want to use it for higher education, you can convert that money into a Roth IRA for them, and that money will continue to grow tax-free. Because one thing that we know is that the money invested in Roth IRAs grows tax-free forever. Okay? Forever. Forever. What am I saying, La fans at, right? So that money can be contributed. If your child decides not to go to college, you can convert that money into a Roth IRA, and they can continue to invest and enjoy tax tax-free gains on these investments. Number 4 is charitable donations. And this is probably for my higher net worth people and the people that love to give, because I understand that the secret to living is giving, right? So if giving is important to you, why not find a way how we can invest money and give it to a charity and save on taxes at the same time? So there are 2 ways, or 2 main plans that you can choose from to be able to invest your money, have it grow so you can use it for charitable contribution later. You have a DAF, which is called a donor advised fund, or you have a private family foundation, or PFF. So you have a DAF or a PFF. These plans allow you to invest cash into an account that's going to grow, and then you can use that money for the charity that you choose later. So you can put up to, I believe it's 30% of your AGI. So if your adjusted gross income is $100,000, you can invest $30,000 in one of these accounts and get a $30,000 write-off for investing money that you're going to use to fund your favorite charity. So charitable contributions is one that I recommend all of you all look into. I actually set up my first DAF last year. I put $100,000 in there, and I got $100,000. I'm gonna get a $100,000 tax deduction for investing into a account. I'm gonna be able to give that money to a charitable organization that I care about. And how powerful is investing, saving on taxes, and making a difference in this world? Okay, so number 5, we save the best for last. And one of the best investments that you can do today to immediately lower your taxes is by investing in real estate. Okay? Real estate is the most tax advantaged asset on the planet. Why is that? Because I can earn in my pocket and lose on paper. So I can earn money in real life in my pocket, and I can lose money on my tax return. That is because real estate has this thing called depreciation. And depreciation is the IRS's way of saying, because that asset might lose value in the future due to wear and tear, we're going to give you a tax deduction today for that asset losing value in the future. Here's the crazy thing about real estate. Real estate actually appreciates in the future. So as your property is going up in value, the IRS is giving you a tax deduction as if your property lost money in value. Like, it's the closest thing to legal money laundering that I ever saw. You can make money on paper, not pay taxes on the cash flow that you make from the investment. Your property appreciates in the future, and the IRS gives you a tax deduction as if it depreciates. That's crazy, right? And there are strategies that you can leverage, aka a cost segregation study, that will allow you to write off up to 30% of the value of the property in year 1. Let's do some quick math, right? Let's say your business does $150,000 in net income. You decide to invest and buy a $500,000 property. Cool. If you follow the rules, run a cost segregation study on it, you'll be able to write off 30% of that property in the year that you purchased it. What's 30% of 500,000? $150,000. So wait, we have $150,000 in income and we get a $150,000 write-off. So what does that mean? That means we now owe $0 in taxes. So the point of me giving you all these examples, there are ways where you can invest your money and pay less taxes at the same time. Isn't that all that we want? Isn't that what we want, to build wealth, but build tax-free wealth for ourselves and our families? So if this episode was everything you needed to know, let me know in the comments. Because we want to spend money to save on tax deductions. But once you realize that the more you invest, the less you pay the IRS, everything changes. So Hit that like button, hit that subscribe button if you enjoyed it, and I'll see you all on the next episode.